Thanks everyone for joining us today and for your patience as we get our technology all sorted out. My name is Kaia Peterson. I am the Executive Director of NeighborWorks Montana. I've been with the organization for about 8 years and in this role since January. And I am based in Missoula. So today we want to give you a good overview of our loan products and a little bit of an overview of our organization. And I'm joined by Lori Yurko, who will introduce herself in a little bit. Katie Biggs and Michelle Rogers from our team are also on the call. So names you may know or find familiar as you start working with us more. All right, next slide, Katie. So NeighborWorks Montana, if you're not familiar with us, we are a statewide nonprofit organization. That in orange is our mission statement. Together, we strengthen our communities by providing education and financing that gives every Montanan the opportunity to live in a safe and stable home where they can thrive. So I think we're most known for working with low and moderate income people across the state, and that is our core focus. We are what is called a Community Development Financial Institution, a CDFI. So our focus is really on combining good financial products that are outside of what the traditional banking and lending sector is able to provide with education and counseling, and really giving our clients the tools and the information they need to make good choices and have sustainable housing options. So you see here our 3 program areas: housing, counseling, and education, lending, and resident-owned communities. And just to give you a really high-level description of each of those, housing, counseling, and education is a really critical part of our work. We have 15 partner organizations across the state who provide a variety of housing, counseling, and education. We're most well known for our home ownership services, but we do have a lot of partners who are providing rental education and counseling, financial skills building, and a whole range of counseling and education options. In our lending world, you'll hear a lot about our single-family lending today. We also do multifamily lending, primarily working with affordable housing developers. We are often the first money in and provide really critical gap early money to help complicated affordable housing projects get done across the state. In March of this year, we hit $30 million in assets in our loan fund. It's a pretty exciting benchmark and milestone for us, and we're just really pleased to be able to provide those resources in the state. And then lastly, our resident-owned community program. This is work to preserve existing affordable housing by working with residents of manufactured home parks, trailer parks, to form cooperatives and buy their land. And we can talk much more about that if folks are interested, but at least that gives you a little sense of some of the ways that we try to advance housing affordability across the state. So with that, I think we're going to dive right into the loan products. And I think, is this my slide, Katie? Yes. So I already touched on this a little bit. Within our lending, we have 2 primary areas: homeownership lending and development lending. And again, we're going to talk a lot about these homeownership loan products today. Primarily, we do deferred down payment lending and amortizing down payment lending through 3 different programs. And those are targeted at folks from up to 120, 125% of area median income, and really are designed to just help those folks who are a little bit outside of being able to become homeowners on their own by saving up their own down payment and working with traditional products. So Lori's going to talk a lot more about those. And then if we go back to the development lending, again, as I said, we really work with affordable housing developers across the state. Short-term financing is our main focus. We do have some long-term financing options. And if any of you are in that sector or work with affordable housing developers, for-profit or nonprofit, we always are available to talk with them about project financing and how our program might support them. So there you go. That's the bulk of what we do in our lending world. So now I think we're ready to dive in more detail to the home ownership side of our work. Lori.
Okay, I'm up.
Yourself and then dive right in.
Hi, everybody. Lori Yurko, and I'm the loan specialist here at NeighborWorks Montana. I, along with Kay's our loan processor, kind of handle the loan stuff prior to close. And then we have a loan servicer, Linda Grossman, who handles everything post-close. So the three of us sort of make up the lending department. I think before I dig into this first product, I want to just go over some basic guidelines for all of our products. So borrowers must occupy the property as their principal residence for the life of the loan. Property must be single-family dwelling. Townhomes, condos, manufactured homes on permanent foundation are all acceptable properties. And of course, I think this goes without saying, but all properties must be located in the state of Montana. For program qualification, NeighborWorks will use household income. So we'll look for program qualification at the entire household's income. Each of our programs has minimum and maximum loan amounts. We like to team up with a first mortgage fixed rate 30-year. We will look at 15-year, but we prefer the 30-year. Borrowers will always be required to have some skin in the game. We're always going to ask them to have a minimum borrower contribution. And that ranges anywhere from $1,000 up to 1% of the purchase price. To use any of our programs, the borrowers must take homebuyer education by an approved NeighborWorks educator. And I know a lot of people always call this the first-time homebuyers class, but really I like to just call it homebuyer education because it's good even if you have owned a home before, and it will be required to use any of our programs. So for NeighborWorks, first-time home buyer is defined as not owning a home in the last 3 years, a disabled member in the family. So if there's a disabled family member, we, NeighborWorks, term that as a first-time home buyer. And also if it's a single parent with dependents, NeighborWorks will also term that as a first-time home buyer. All of our programs have liquid asset limitations and total asset limitations. Our amortized loan products require an automatic withdrawal, an ACH payment from a checking or savings account. We will accept third lien position. So, you know, we will always look for that, and on occasion we might take fourth. So please don't feel like you can't call and ask if we might look at a lower position than second. What else can I tell you? We don't accept any non-occupant co-borrowers. And for the home programs, so those will be the programs that are 0% deferred, you have to be a true first-time home buyer. That is a requirement of those federal funds. And I think that's it for maybe just the basic guidelines. I know things will always pop up, so please ask questions or you can call us anytime. So let's dig into this first product. We have 2 amortized loan products and we have 1 0% deferred program. So we're going to start with one of our amortized programs. This is a statewide low to moderate income product. You can see that our loan amount minimum is $1,500 and the max is $10,000. The term and the interest rate of the NeighborWorks loan will be dependent on where the income for the household lies. So the term, if the adjusted median income for the household is below 80% of AMI, adjusted median income, the term will be 30 years. If the adjusted median income is over 80%, then we're going to have a 15-year term. And the interest rate is figured the same way. We have sort of a layer of different percentages of AMI, and those will give you the rates. So for instance, you know, we've got 51 to 65, it's going to be this rate. 66 to 80, it's going to be this rate. So you can certainly find those on the program guidelines that I think you have in front of you. If not, they can always be found on our website. So these rates range anywhere from 1.5% up to 7.25%. There is a little bit different in rates. We have one rate that can be used for borrowers who are using a participant lender, and that would be a NeighborWorks participant lender. That's a lender who participates in our bond pool, and they get a little bit favorable rate for their borrower. And then there's another set of interest rates that can be used for lenders who aren't contributing to our bond pool. So this is open to anyone. We always say you can use NeighborWorks funds if you're approved by Montana Board of Housing, and or if you're approved by Rural Development. So either one of those. And you also have to have a brick and mortar office in the state of Montana. So any of those, you're more than welcome to use our programs. Again, we're going to look at a fixed rate, and those rates again will be itemized on the guideline for this program. Again, the payments are going to be ACH, so that is a requirement that all the NeighborWorks monthly payments be made automatically via a checking or savings account. And of course, we have homebuyer education. We just think this is so important, and it comes along with our programs. If you want to use the NeighborWorks programs, your borrowers will have to take the homebuyer education class. Let's see, I'm looking here at my handy dandy sheet. I guess I want to say that we have ratios assigned to all of these programs. For instance, this one, I think our guidelines say 29:41. So I want you to know that the black and white ratios in our guidelines are really just a guideline. Please know if we have some good compensating factors, we can certainly go above these ratios. Actually, the housing ratio, we can go up to 32 and even higher if need be. But that back end ratio, if we've got some good compensating factors, we can certainly exceed that guideline of 41. Just reach out to us and you know, tell us what you think you've got, and we'll say, hey, I think we can look at that, or that's maybe a little too high for us. But just know when you read these guidelines on each of the programs, you know, we do have some flexibility. So just keep that in mind. And this particular loan product can be teamed with any first mortgage. It can be teamed with an FHA, a VA, RD, or conventional. Just know on the NeighborWorks Montana side of things, if this is an FHA first mortgage, this particular loan product cannot be used for the 3.5% FHA down payment. But we can do closing costs on an FHA, or I've seen with an FHA first, maybe the borrower has a second mortgage, a home 0% deferred, like with the Missoula HRDC, and then we can come in with a third position, and everything's fine because they're getting that 3.5 down from government funds, so everything is good. I think that's it, Katie, on that one, I think. I'm sure we'll have some questions. Our second amortized product is the 20+ Community Second. To participate in this program, you must be a participating lender, and that's a participating lender in the NeighborWorks Montana loan pool. And we will show you that slide when we get done with this, who those participating lenders are. This is a fabulous product. It's our newest developed product, and it was developed to work in conjunction with a conventional first mortgage. This way, NeighborWorks is coming in with 20% on a conventional product, and we don't have any MI. So that's fabulous for the borrower. We are noticing, you know, since we've had this, that sometimes this isn't always the best route to go, but it is a wonderful program. There's no maximum loan amount. We can come in at 20%. And really, in all actuality, we can come in at 25% because the CLTV on the NeighborWorks side of things can go to 105%. So if your secondary market will accept 105 CLTV, combined loan to value, we can come in with actually 25%. So it's going to be a 30-year fixed rate. The NeighborWorks interest rate is going to be 2% above the first mortgage interest rate. Again, we're going to have automatic payments for the NeighborWorks monthly payment. Again, we're going to have home buyer ed requirement. The liquid asset limitation on this particular product is $7,500. So post-close, we hope that the borrower won't have any more than $7,500 in liquid assets. If they do, it doesn't mean that they don't qualify for the loan program. We're just going to ask for anything over that $7,500 liquid asset balance to be put in the deal. And let's see, this particular loan product can go to 120% of adjusted median income, AMI. So again, that's going to be household income up to 120%. And I want to tell you that this teams up with any conventional first mortgage. Well, I should say any conventional first mortgage that, you know, will accept our community second. And then also Montana Housing, Montana Board of Housing. I'll never get used to calling them Montana Housing, so they'll always be Montana Board of Housing to me. They have a special loan product, a special conventional loan product that can team up with this 20+ community second. So it's I believe the only conventional product they have, and it teams up with this NeighborWorks 20+. So that's a nice addition also. I think that's it, Katie, on that one. And here are the participant lenders. So these would be the participant lenders in both of our amortized programs. So for the 20+ community second, and then also for that first program we talked about, the low to moderate income program, these would be the lenders that get a little bit better interest rate for their borrower, would be these lending institutions here. If you want to know how to become a participant lender, you'll want to talk to Kaia, our executive director, and she will just give you the business. Okay, so we're going to stop with the amortized programs and move on to our third and last loan program, which is a 0% deferred loan program. And these are federal funds. Please know the other two programs we talked about use NeighborWorks funds. We have a lot more flexibility because we're using our own funds with those two programs. This program, we're using federal funds. We don't have as much flexibility. And with federal funds comes a few more little nuances and requirements. I call them hoops. But it's such a great program. I mean, where else can a borrower get a 0% deferred second mortgage? Please know it is a second mortgage. It's not a grant, so it's never forgivable. But it won't be due and payable until, you know, all those good things they sell. Maybe they refi their first, you know, all of those things. So this program has a minimum NeighborWorks loan amount of $2,500 and a maximum of 25,000. We can go up to 40,000 if there's a disabled member in the household, if it's in a high-cost area, or if it's a mobile home on a permanent foundation. The term is 15 years, and then it's automatically extended for another 15 years if the borrower is still occupying the property. The interest rate is 0. There aren't any payments. And of course, we need to take that homebuyer education class. And it's really important with all of our programs. Remember, this is a 0% deferred, so this needs to be a true first-time homebuyer. So very important, that we're coupling this with a homebuyer education class. The little extras on this program, one of the biggies is, and this is odd, but the housing ratio has to be at least 29%. So we're not going to accept anything that is a lower housing ratio than 29%. And the reason is the feds say we're over-subsidizing the borrower if we're looking at a housing ratio below 29%. So at least 29%. And again, we can certainly go over that. We have some flexibility with the housing ratio on this program, but we do not have flexibility on the back-end ratio. The back-end ratio cannot exceed 42%. So, and that's just it. It cannot exceed 42. Also for this program, the government's going to require a housing quality standard inspection. That's an HQS inspection. NeighborWorks will order that. We have to have a passing HQS inspection before we can close. We're also required to order an environmental inspection, and NeighborWorks will place that order for that review. We also have to have a passing environmental review prior to closing. And final approval for this program won't come until a bit later. NeighborWorks will issue a conditional approval letter, but one of the conditions will be final approval from the funder, and the funder is Montana Department of Commerce. So we won't have true final approval until we get that approval from the funder, and that does come, a little bit later in the game. NeighborWorks will have already issued their conditional approval letter, and then once we receive everything, we need to have a passing HQS inspection, a passing environmental review, and some other documents. Once we have all those things, then we can send to the funder, Montana Department of Commerce, for approval. Once we have that approval from MDOC, we can set a closing. So just know this particular loan program takes a little more time. We're using federal funds. So you just want to be really upfront, I guess, with seller and say, we're going to try to use this 0% deferred program, and it does take a little bit more processing time, but it's so worth it to the borrower. It's a great program. Again, this program can team up really with any first mortgage product, FHA, VA, RD, conventional. This program requires a match. And the best way I can explain that to you is if your first mortgage is MBOH, so if it's Montana Housing, the match is automatically taken care of. So we don't need to worry about it. If your first mortgage is not going to be MBOH, Montana Housing, then we have to have some seller pays of 5% of the NeighborWorks loan amount. So we can have 5% seller pays, or we can have like a 5% gift given directly to the title company. The gift cannot come to the borrower. It has to go to the title company. So, I mean, we can certainly talk about those instances, but if you don't go MBOH, that's fine. But we just have to find a 5% match somewhere. And let's see, I think that's it. The liquid asset limitation for this program is $5,000. Total asset limitation, $75,000. We're always going to want for all of our programs, if you can remember this, but if you don't, we will reach out to you. But with the assets, we're always going to want to know their autos and their household good estimated value, because we're going to put that into our total asset calculation. Okay, here's our adjusted median income sheet. I just think it's kind of important to go over this because sometimes it's like you're looking at it going, how in the heck do I read this? So this can be found on our website, or you can certainly print it off. It does change every year around July. This was effective July 1. Sometime around that time every year we will change the figures. So let's look here. Let's say we're looking at a property in Custer County. So we're going to go down here to Custer, and it's going to be a family of 3. So we're going to move over. This first column is for a family of 1. Then we've got a family of 2 and a family of 3. So the adjusted median income figure in Custer County for a family of 3 is $68,875. So to find out the adjusted median income, you can take the household income and divide it by this top figure. This is the adjusted median income figure. The other figures in that column, I like to call just as bullet points. The one below that is the 55,100. That's what 80% of that adjusted median figure is. The next one down is what 115% of that adjusted median income figure is, etc. So those are kind of just like eyeball points, so you can see, oh, I'm going to be under 80 and I'm good to go. So anyway, we've got a bunch on the very top of this, we've got a bunch of counties lumped together. They're all the same adjusted median income figures. So whether you're doing Park County, Phillips County, any of those on the top, they're all going to be the same figures that are right below them. Okay, and our reservation checklist. This is going to be the list of items that we would like you to include in your loan request package to NeighborWorks. This can be found on our website, and you might be looking at it right now, I'm not sure. It might be in front of you. We can accept reservation packages, of course, through the mail or overnighted. And actually, we can receive them via email. If you have a secure email way to get it to us, we will certainly accept that. And we also have the ability using ShareFile to have you load up your loan request into our ShareFile, and we can get it that way. I know a lot of lenders these days, are all secure when they're emailing, so they usually just email directly to us using a secure email, but we can do it a variety of ways. So we want this particular sheet to come on top of your loan request package, and it's pretty self-explanatory. Pretty much we need everything on this list. There are a couple of exceptions. If you do not have the appraisal yet, you can note that that's going to be coming. And if the homebuyer education hasn't been taken yet, you can say forthcoming. But we hope that it has. But that, if it hasn't, that can come later also. But really everything else we do need right up front so we can start reviewing the package. The more complete the package, the smoother the initial review process is going to go. Reminder that we do want autos, year, make, model, all that, and estimated value. And we do want an estimated total value of household personal property. We also, at the time of application, want a VOE. So we're going to actually need a written VOE. And we're also going to need 2 months current consecutive pay stubs. So if that's something you can get us right up front, it's great, because then we don't have to reach out to you and say, hey, I need a couple more pay stubs. We really only need tax returns if either of the borrowers are self-employed. So that's really the only time we need tax returns. We don't necessarily need them on wage employees, but hey, if you want to send it to us, great, but you don't have to. I think that's about it. Right up front, we do like to have a copy of that title commitment. Even if NeighborWorks is not added as a proposed insured yet, we still would like to see a copy of the title commitment up front, because that way we can just see how things look and we don't have to wait till later in the game to look at that title commitment. And I think that's it. Please know, you're never going to know everything about the programs. You know, even we struggle and have to look at the guidelines every now and then. So just know that we're out here. Please communicate with us, ask us questions. You know, we want to be here for you, and we want to help you close loans. So looking forward to working with a lot of you. I see a lot of familiar names on board, but I see some new ones too. So it's very exciting. Thanks for tuning in, and we'll answer questions later.
Thanks, Lori. Great. So as you're hearing, there are a lot of different components to these programs, but really we try to make it accessible to you and your client. Lori is a wealth of knowledge, as you've seen, and like she said, we just really encourage you to give her a call, give our team a call, and chat with us about what your client's needs are and how we might be able to help. You know, as I said at the beginning, we're really here to help people achieve that homeownership dream that otherwise might be out of reach. So it can take a little bit more time, particularly on those deferred loans, but it really, like Lori said, is really powerful for those borrowers who need it. Just want to highlight again our partner network. So Lori mentioned a couple of times homebuyer education. We see that as a really critical part of the home buying process, particularly for the borrowers who we work with. And what we've seen is that having good homebuyer education up front helps clients be successful long-term. We see lower rates of delinquency and default in clients who have taken these programs. So these are partners across the state. You may recognize some of these organizations. For places where we don't have an in-person class available, we do have online classes available, and we pair that with one-on-one counseling. So you can find all that information on our website, and clearly during COVID, we're working primarily remotely and making sure that these services are still available to people during this time. So we are happy to answer questions, love to hear what's on your minds and how we might be able to help you and your clients. You know, this is a particularly difficult and wild time for a lot of people in a lot of markets in our state. And I think probably many of you, like us, are trying to think about ways that we can really meet the needs of clients and buyers right now. So the products that Lori went through with you are our core products, and we're always looking at ways to improve those and find other opportunities to help clients as well. So always helpful to hear from you what you're seeing in your corner of the state and what the needs and opportunities might be, in addition to questions. So we can open it up. I think, Katie, can people just unmute themselves?
Yep, you should just be able to unmute yourself and just make sure you let us know who you are and where you're at. We didn't have any questions that needed to be addressed from the chat, but feel free to go ahead and ask. We've got some time.
Excellent. I think I'd say also, I know some familiar faces here on the call. If you've used any of our products before and want to chime in with what your experience was or feedback. Be great to hear some of your voices as well today. So while people are thinking, Lori, I was going to ask, you know, you work with all these different products, all these different clients. Maybe give a little bit of a feel for, you know, who's your typical 20 plus client, who's your typical low mod client. I know typical is like a word that basically doesn't get used in our organization or even in our sector, but maybe give people a little bit of a sense of who are these borrowers who we're working with.
Sure. Yeah, you know, typical is, you know, sort of in quotes, because from our programs, you know, we can go anywhere from, you know, actually 0% AMI, adjusted median income, all the way up to 125% AMI. That low to moderate amortized program can go up to 125%. Typically, the client that uses the 20 plus Community Second program typically has higher mid-credit scores, or just higher credit scores. I don't know, I don't like to say this, but they're maybe a little bit more astute. It just seems like they're very astute in terms of the home buying process. And that's just what I kind of see with 20 pluses, but not always. You know, with the state home deferred 0%, of course, we're going to see first-time home buyers that don't have a lot of money for down payment. You know, maybe we're seeing some lower credit scores. And let me interject, because I think that's something I forgot. NeighborWorks uses the guideline of a mid-credit score of 640. So anything below 640, we have to look at a little closer. We'll maybe ask for a couple more things. But I can honestly tell you, in all my years at NeighborWorks, which is 203 years, I have never seen NeighborWorks deny a loan because of a credit score. So just know that that's probably not going to happen, but we're going to ask for a couple more things. Like we might ask for a verification of rent. We're probably going to ask for a credit explanation letter from the borrower. And we're probably going to ask for a credit letter or some sort of letter from the loan officer as to why NeighborWorks management should consider a credit waiver. So anyway, where am I going with that? Yes, the state home borrowers or applicants usually, not always, but usually have a lower credit score than someone we might look at for the 20 plus program. And the low to moderate program, you know, really that runs the gamut. We see all sorts of borrowers in that. So it's hard for me to say a typical borrower, but
yeah, it is hard, right? Because
hard.
we really do serve a wide range of clients. I was thinking about with the 20 plus program, you know, it was, like you said, it was designed really to serve people in more urban markets to help them get conventional financing and not have to pay for mortgage insurance. And I think with that program, we saw a lot of young couples and young families, and also single professionals seem to be a pretty common group of folks who, you know, they need a little bit more buying power in order to get into the market as a single person on a single income. But they have good income and they have good credit, and just need, like Lori said, a way to have a savvy first mortgage loan that they're building more equity than they otherwise would be able to. And then I think, like you said, with the low mod, it's really any client who just has a small gap in being able to get to the closing table. So that can be a lot of people depending on their situation, particularly where we see rental rates being so high and difficult for people to save up even small dollar amounts to cover closing and down payment. So it just gives people a little bit of a sense of who we're serving. And when you see a client walk in your door, and they're really trying to figure out how to piece this all together, who might be a good candidate for a NeighborWorks Montana loan. Any questions that we can answer for folks at this point?
I want to know if Carol Holman is listening. I see her name up here.
I see her name.
I'm gonna point her out.
She has done a lot of NeighborWorks.
She's not gonna get on. She has, and she's like the layering queen. I mean, she's layering that with a first mortgage and maybe a second 0% deferred in her area, which is Missoula. And then NeighborWorks is coming in with a third and sometimes even a fourth if she's got some other funds in there. So Carol Holman at Stockman Bank in Hamilton, she really knows how to do the cocktail loan, the layering effect.
Yeah, sometimes that's what it takes for these borrowers, isn't it?
Sometimes, yeah.
Yeah. Okay. Katie, anything else you want to raise?
No, so we have the contact info for these lovely loan lending team, for our lending team, and so please feel free to take a look at that, snapshot it. We are sending out this presentation with our Lender e-News, which if you signed up for this, you receive our Lender e-News, but please feel free to forward that to your team so other people can know as well. And this will be recorded, or it is recorded, so it can live on our website.
Awesome. Thank you. So we can't do this work without you, our lending partners, our realtor partners, our private sector partners across the state. And we so appreciate that all the work you're doing every day to help people get into homeownership. So hope to do more work with you. Give us a call and have a great rest of your day.
Bye.